warm welcome to everyone present across Australia. Great pleasure to be speaking to you guys because Australia has been historically more of a service-friendly nation, a nation which has fostered quite a few services into its bosom. So, on the financial side, again, Australia has been interesting of late, as there are many, say, big fours are expanding into all the horizons. On top of it, you have a bulge bracket investment banks opening up new offices, and of course, there's the one sector which has brought them to Australia has been mining the metals. We have one of the largest companies in metals and mining in Australia, and apart from that, there are many investors which are interested into that arena. All this has been buttressed by the bankers, be it commercial or investment, the advisors, and so on and so forth from the BFSI sector. Now we are looking at financial modeling from our side. Why and how that is important in today's BFSI sector and implementation, on the implementation side specifically. What is that industry is expecting from us? When we say from us, means what is that industry is looking for from the candidates in terms of the knowledge and expertise they bring on the table. Now, any company will specifically look for expansion and increase of revenues, or you can say value for their stakeholders. For this, they either go organic way or they go inorganic way. That is, they either do the capex for their funding purposes, or they go for acquisitions, mergers, etc., etc. They either deploy their own funds for expansion plans, or they use the funds from the market in form of equity, debt, mezzanine instruments, structured products, and so on and so forth. They either go for internal current projects expansions, or they go for unrelated diversification. All this venturing up into a new project, generating value for your stakeholders, revenue and positive cash flows, and of course the overall business model occupies a space in the financial model. So what's modeling? If we ask this question to new candidates, we have got different answers for financial modeling. But let's first understand what modeling means. Modeling is basically a structure to giving a shape in form of any structures. When I combine the word financial with it, it is mathematical representation of any given structure. The second question that comes to mind is, what is structuring? Okay, because we are referring to financial modeling as something as a mathematical representation of a structure. So what is a structure? Let's take an example of a simple plant and machinery costing $1 million Australian US dollars. So what is the cash flows that machinery is going to generate in future? What is the expenditure that you're going to incur to maintain that machinery? That is maintenance. Whether you're keeping it into your own premises or the rented one, so there will be an additional expenditure of rent. Even if you're keeping it into your own premises, the cost of opportunity would be shown up. So all this, starting from the capex to the generating of the cash flows alongside the expenditures, and valuing whether that machinery is profitable for you or not. Okay, that whole exercise would be a structure of that plant and machine. That is a simple plant, which we're talking about costing $1 million US, Australian dollars basically. So that is on a very basic level financial model. When I combine various asset classes and go a step further, alongside the human resource, that becomes a company which can be listed or private, so which is looking for generating value for their stakeholders through organic or inorganic ways, by venturing into profitable projects, either using their own cash or using the cash of through the market by availing the funds in form of an equity or debt. The whole understanding of that company becomes a financial model. Okay? So it's a combination of asset classes. You can prepare a financial model for one asset. You can prepare a financial model for a company. You can prepare a financial model for a state government, for the central government, for the whole country. The combination of countries when it becomes a region, if for example Southeast, Southwest Asia Pacific region, so something like that, and so on and so forth. So let's see what and why do we prepare financial model. When we ask this question to those who are from the industry, that when do you prepare a financial model, or what does a financial model typically looks like? We got different answers there as well. Some said that it's an Excel sheet which contains current and projected cash flows. Some stated that it's an Excel sheet which contains evaluation. Some stated it's an analysis based on the ratios, and so on and so forth. But when we look at the actual meaning and actual understanding of it, what stands inside the industry. Why? Because we are more interested into what is the application of it. Okay, what is the application of the same inside the industry? So it's a combination of all the answers which have been stated for. First of all, any financial model has to be really simple. When you're talking about simple, simple doesn't mean just being that it's not involve complex structures. No, simple means that if I want to locate any number, any revenue number, any cost number for a particular company, I should get that in no time. How that number has been derived, I should get that in no time. So that's what simple means. Simple doesn't mean constrained to one or two sheets. Simple means as soon as I want to locate where my mistake is, I should be in a position to. Okay. Secondly, it's always about future when we talk about financial modeling, apart from the historicals. Okay, so that's when the projections come into picture. What you are going to do as an incorporated company or a corporation in the upcoming 5 or 6 years. That's what is going to decide your value. So that's why we have the historicals as well as the projected cash flows along with the expenditures there, which gives you a clear idea of how the structure looks like. When we incorporate historical projections, actually we are incorporating all the points which we discussed now. That's the organic expansion, inorganic expansion, in-house funding, outside company funding. Okay. And whether we are going to continue with the current product line or we are going to expand to new product lines, whether we are going to acquire any company or not, and so on and so forth. So all those things are incorporated into future cash flows. And once we are done with that, we'll present how does my profitability ratios, activity ratios, and so on and so forth looks like. Whether I'm sound enough as a company to pay my debt in the future in form of a debt service coverage ratio. So all those would be covered up in a various ratios which you will be using. Any financial model is not complete without valuations, because all the fight, all the negotiations which are happening across the globe in the industry, in the business, is that of one thing, that is pricing, that is valuation. So we value that particular company based on the projected and the past cash flows which will be generating, based on 1 year forward, 2 year forward multiples, based on what transactions have happened in the industry in the previous times of the similar types, basically. So all these are three different methods. We're talking about discounted cash flows. We're talking about industry comparables when you're comparing with a similar type of companies which are getting traded currently. And we compare it with the precedent analysis. That is, what transactions have happened in the past of similar types. Rate, say, multiples those companies have took in past. So that's what valuation means. A mathematical tool, analytical predictor tool, cash flows, present and future, and valuation. That's how a financial model should look like. Now, when it comes to financial modeling, what are the careers we are looking into it? Let's talk from industry's perspective. Be it a regulatory finance, that is your big fours, okay, or the other taxation firms, be it a front-end finance, that is investment banking, securities houses, private equity funds, hedge funds, pension funds, mutual funds, okay, or any investment houses or financial institutions. That is my front-end finance, okay, or be it onto the government side, that is government finances. Everywhere we will be using a financial modeling. So these are some of the locations and positions where you will find financial modeling being helpful. Let me give you my own scenario. I'm an ex-UBS banker. In our organization, when we used to be working on transactions, we used to typically be working on transactions about 500 million US dollars. So on or about that amount, because we used to deal with Fortune 500 companies and so on and so forth. So UBS in a typical environment, it starts with an entry-level analyst, then it goes to associate, then it goes to VP, then associate director, executive director, and finally the managing director. That's how the hierarchies work. So an entry-level analyst was required to use financial modeling on a day-to-day basis. The VPs, etc., used to use financial modeling. They used to observe the given models. So their task was further difficult. To prepare a financial model, when you're doing that, you know where you have to start, where you have to end. And that's what these classes would help you in determining. But to understand anybody's given model, which has been prepared by somebody else, in no time, that is in 15 minutes, 20 minutes, and at that time you had to find out a mistake, is further difficult. So there was not even a single person on the execution side of investment banking from top to bottom who didn't understood what a financial model is and how to prepare that in no time. And we are saying in no time to prepare a complete model of a listed entity with a 5 years projections in 5 hours, maximum 6 hours. If you will ask any person who is new into the field and to do that, they will take probably 3 days, sometimes 5 days, and sometimes a week, and still they couldn't prepare it error-free. Okay? So when it comes to securities house, when it comes to the research side, on the equity side, investment partners, debt market advisory, being a finance manager in any corporate which is not into finance, be it a real estate, analytics, equity research, or risk management, in all these places, the financial modeling is used from top to bottom. So these are various areas basically where you can find your place and if you are very good at financial. This is an average salary that we are talking about of any financial modeler, from ranging from 75,000 to $100,000 in USD on any given, say, position. So you're talking about analyst to analyst comparison, or you're talking about manager to manager comparison. If you are a finance manager and you have the more understanding of financial modeling, you would draw at least 30% higher than what a manager in any other field or direction would on. Say, for example, manager in marketing would draw at least 30% lower than what you are drawing. So they might be drawing it around 50,000, you're drawing it around 65, 75,000, something like that, on an average. The difference can be really higher if you're really good into financial modeling and have good solid understanding of markets alongside. So that's the stage of the salaries. Now let's talk about how does the BFSI sector outlook is when we're talking about Australia, that is specifically Sydney and Melbourne. So there is a surge in number of internal promotions. Why? Because there is expansion. Okay? I'm looking at more ADs, I'm looking at more VPs from the current force. So the current force, which is inclusive of associates, is seeing at how to promote and whom to promote internally so that we can have more VPs, which can be further promoted to ADs and which can be further promoted to EDs and MDs, so that we have an expanded team network which can be utilized for striking more transactions, as there is a clear-cut demand from the market. So we are seeing a surge in number of internal promotions, hiring for senior roles, which was difficult in 2012, but is picking up in 2013. There's a heavy demand in sector overall. As per our understanding and analysis, we are having really good number of vacant positions currently in Sydney and Melbourne, especially from Big Four and bulge bracket investment banks. Yeah, and of course few investment houses. Usually the salaries for a non-Ivy League MBA grad would be around $85,000 to $90,000 dollars, and we are looking at around 25 to 45% bonuses year on year. They can change. We have witnessed in Ivies and investment banks, typically in Goldman Sachs, UBS, bonuses up to 70%, 90%, 100% of the packages. So if you're drawing $100,000, you're looking at $100,000 in terms of bonuses. Now, if you want to get selected in one of those types of companies, be it a private equity house or a bulge brackets, it is inevitable to have the knowledge of financial modeling. Just the understanding of fundamentals is not going to work. So that's what the sector outlook is for BFSI. And of course, we are expecting for at least another 5 to 6 quarters of hiring to continue with a decent macroeconomic factors and so on and so forth. The strongest demand is from business analysts, management accountants, and internal auditors. All these 3 locations or places, the types of jobs we would require the understanding of financial modeling. What are the skills required for this role? As I explained, there are 3 wings basically for any financial sector across the globe. And we're talking about across the globe, including tax havens basically. Okay, so we have risk management, that's one pillar. The other pillar is regulatory finance, which includes audit and taxation. And the third is on the front end side, that is pitching and accounting. That is where your investment banks, private equity houses, securities houses, brokerage firms, etc. are included. In audit and tax, your big fours, your tax advisory, your audit advisory, etc., are included. Direct taxes, indirect taxes, and so on and so forth. On the risk management side, you have FRM, GARP rules, you have understanding of VAR, and so on and so forth. So all these three things have one commonality in them. That's the valuations. That's the understanding of financial modeling. So it's the base basically. So these are the combined, whether you opt for one or the other sector. Financial modeling is at the core. You have to have this particular knowledge in order to succeed quicker and get hired quicker into these roles. So let me give you a clear insight, because I'm from the employer side, so we understand what are the hiring requirements and so on and so forth. We are clearly looking for candidates which are having a thorough knowledge of not just fundamentals, but Excel skills along with the valuation skills, and whether they can develop the models or not onto the investment banking side. Why? Because we are ready to pay a bit on the higher side, but not ready to invest the time into training. Of course, there has to be a training, but limited one, not the one which is of 1 month or 2 months or 3 months. Just curb that time. We're looking for people having these kind of certifications. So that's how it is from the market side. Now, this is the understanding, or you can say salaries which are being given in Melbourne, Perth, Sydney, and Brisbane on an average from associate level to director level. So you can see there is very less difference, but the pays are really high when you are having an experience of financial modeling as well. So we are looking at somewhere around 150,000 US if you're a director on an average, and this can go higher when we're talking of bulge bracket investment banks. It can go slightly on the lower side when we're talking about mid-sized companies. So it's on an average pay that we're talking about a director level or at an associate level of 65 to 70,000 Australian dollars. Now, US dollars, because this has been zeroed down onto the US dollar. Now, this is the hike that you're seeing. Now, the important thing is, if you're having an understanding of the financial modeling, even before you have begun as an associate level, your hike or your progress would be really fast. Why? Because you would be different one, apart from, you would clearly make your mark in the sense that you would understand the modeling or apply the evaluations and preparations of models way quicker than what others would do. Because now you would be having the knowledge of these sectors. Apart from that, you would be having knowledge of how to prepare the model. So that's what the difference is when it comes to a person having a knowledge of financial modeling and another candidate, any other candidate. These are some of the companies which are hiring people with these kind of skills. That's Crowdfund, Capital Advisor, Commonwealth Bank, of course, LCG, SS Partners, of course, Big Four are hiring, Aviva, Tortoise, Capital Advisors, Nova Star Finance, and so on and so forth. We have been talking about financial modeling since the beginning of this session. Let's see how does it look like. We'll take one such example, that is of LinkedIn's IPO. Our team has prepared this particular model, that is LinkedIn's IPO. Then it was about to come into the market, and the bankers which were advising on this IPO had to prepare this so that they can show value to the investors, to the potential investors into LinkedIn. Okay, so let's see how does this model look like. We are having several tabs here. First of all, as I said, it has to be really simple. Simple doesn't mean compressed. Simple means that if I want to locate anything, if I want to find out any other, it should be in no time. So let's see what all tabs we are having first. We are having a summary tabs of ratio analysis. We have a summary tab of valuations. And we are having assumptions sheet for the balance sheet assumptions. And we are having revenue build-up, cost build-up, asset schedule, equity, viewpoint analysis, profit and loss account, balance sheet, cash flows, ratios, valuation sheet. Comparables, it's again a valuation but to a different method. As we talk about trading comparables and person analysis. So I'm comparing LinkedIn with the likes of Google, eBay, Amazon, Baidu, Oracle. And finally, the football field chart. Okay. So let's start with the assumptions on the balance sheet. See how dynamic they have been made in such a way that if I want to use a scroll bar or CAGR, the numbers would change automatically, whether I should use the scroll bar, whether I should put in my numbers. Okay, the moment I change these numbers, the whole model would change. It's a dynamic model. If I change any number, anywhere, my final valuation would get impacted. And that's how a dynamic your model has to be, apart from being simple. And so these are drop-downs. Drop-downs will be horizontal side as well as the selection bars, and so on and so forth. So it's for accounts receivable, prepaid expenses. In a similar fashion, we will prepare a revenue buildup. Now, revenue buildup would differ from company to company case. Here we are taking quarterly numbers. Here we are changing it from quarter to quarter. Why? Because LinkedIn was growing really fast on a quarter-to-quarter basis. So that's why we are showing on a quarter-to-quarter basis growth in number of registered users and how much revenue we can derive from it. And so this is a list, or you can say the numbers for registered members and the growth rate that we are envisaging in them. Corporate solution and say there are two categories, retail and corporate solutions. So growth in both of them. Now there are three segments where we are deriving our revenues from. It's again in US $1,000. So 6 million we can say from hiring solutions in 2009, it's for the quarter, and then marketing solutions, and then premium solutions, and then total revenue per quarter. That's what we are looking at. So if I combine for the quarters given, I'll get my yearly revenues. That's what has been done here. Okay, so I have derived my yearly revenues and yearly numbers so that I can use that for in my profit and loss account. Overall numbers for the members in retail market as well as the corporate side. What kind of formulas to be used, in what stages, and all that will be covered up in the section. In a similar way, we have built up the cost side, as for the costing of sales and marketing, product development, G&A, with the estimated growth there. Similar way, we have prepared the asset schedule that includes all the tangibles as well as the intangibles, because with LinkedIn, we are talking about patents, we are talking about various kind of copyrights, trademarks, and so on and so forth. It's especially patent side. So we'll have the valuation, or you can say depreciation onto that as well if required. In a similar way, we prepare our equities tab. If we are having a debt-ridden company, that is a company that is having a debt, any amount of debt, then we prepare a capital as in tab. Okay, not equity. Here we are preparing equity because LinkedIn is debt-free. I can say safely that it was debt-free when we are preparing this model. So we'll have all kinds of instruments here, the mezzanine, the convertibles preferred, the convertible debentures, how to value them, how to value the warrants that are being issued, how to value the ESOPs and options that are being issued. So all the types of instruments would be valued there, and the number of shares would be found out from there. In a similar way, we have a viewpoint analysis. This one analysis would give you a complete picture of how much I'm making on assets, how much I'm making on equity, how much we are making on in terms of net profit margin, and so on and so forth. Now see how simple a profit and loss account is, even though it is of one of the complex companies in the market. Okay. The ones in a different color, as you can see in every sheet, are the ones which have been hard punched. Why? Because these are historical. Okay, these are in past. From 10 to 15 onwards as a future. So you can see the formulas there. So any number that has been derived through our calculation, it should come from assumptions or revenue or cost build-ups. we should not do any calculations here. So this is how a profit and loss account looks like in a balance sheet. The cash flow statements will be prepared, a ratio analysis of the profitability, now ROIA, that's the return on investment, the activity ratios, the solvency ratios, and so on and so forth. Finally, evaluation, for which we prepare the financial model, apart from the ratios, etc. So, as you can see here, the value per share which we derived for the LinkedIn is 33 when we're doing this in FY09. Now, let's see if I change one assumption. Say I'm increasing the growth in registered users in last quarter of FY10 from 12 to say 15%. The moment I change this, I'll get the valuation according to it. So the price has, or the valuation is increased by $1. This is how dynamic your model has to be. Okay. So everything is to be linked internally. There should not be anything which is alienated or separated. The moment I'll change this to, again, older number, I'll get my older valuation. So this is one method, trading comparables is another. And finally, we have football field chart. This would give you the idea of how the P by PE, P by E, and E by EBITDA multiples are looking. What we have calculated here. See, it's from 31 to 66. And EV by EBITDA case, that's what we're having. 30.6 to 66, that's 65.6. These are rounded numbers. Based on this, the discussions go on. Based on this, the MDs, etc., along with the company side, decide upon what should be the value I should garner from this particular analysis and so on. So yeah, everyone. Now let's look at what we have to offer when it comes to the financial modeling class in Sydney and Melbourne. Some of the highlights: we will have 4 full days classroom training by industry experts, 20 years, sample financial models, example workbooks, PDF guides, unfilled and filled Excel templates for practice, 24/7 support for adult hearing. Yeah, so you're having a full portal to work with. You're having 20 hours of video tutorials you can switch on at any point of time if you're having any confusion in any of the classes which we have took already. And of course, you're approved by GARP CFA Institute for CE credit, which is an added advantage. Now, what will you reap in terms of once you're done with the financial modeling with EduPristine? It's that you will be in a position to create financial models, be it as complex as a merger model or project financing model, or a model for a metals and mining company, model for an IT company, and so on and so forth. So you'll be in a position to prepare that in no time. You'll understand that, learn that, how to easily maintain them, how to change the numbers, how to forecast the future years. You'll learn to prepare these error-free, which is very, very difficult task. If you'll ask anyone to start afresh and prepare a model, 99% cases they'll commit a mistake there. So you'll understand where are the shortcomings, etc. of a model, and of course you'll also gain the knowledge of less commonly known Excel features. Some of the details about the batch which is starting on 25th February, that is the next month. You'll have an exclusive 4 days MasterClass. Costing is $2099. Contact person is Kyra Smith. Please note down her details. You can also see her email address at the end of the slide and contact details as well. So if you have any specific doubts about the batch, etc., you can contact Kyra. She will coordinate on it. Some idea, or you can say, details EduPristine as a company. First of all, we are authorized training provider for international certifications like CFA, FRM, PRM. Okay. We have provided training of more than 1 million man-hours to more than 10,000 finance professionals across the world, which are spread across 40+ locations, that is 40+ nationalities. So that's our reach. We are present in almost every big country across the globe. providing 25 plus courses through online videos, classroom trainings, question banks, crash courses, webinars, etc. We are running or you can say we are pioneering financial modeling in Excel and business analytics across Asia. Our investors are SL Partners, Dr. Mark Mobius, the bond, you can say a wizard, the bond investor, one of the greats, Mr. Rajesh Segal from Franklin Templeton, our founding directors. We have experience in companies like Goldman Sachs, Standard Chartered, Accenture, S&P, Reliance Private Equity. The team has got the faculty pool is of more than 1,000 plus professionals across the globe. Okay. And of course, we have took training directly inside corporates like E&Y, Bank of America, JP Morgan. The key strengths, as you can see, is that we have got a very good online technology platform, very good content which can be referred at any point of time, even after the sessions are finished. And of course, we have got the training pool or experts which are from the industry, which play with the financial models on a day-to-day basis to come and teach you all to that. These are some of the authorizations we have from the leading certified bodies, as the CFA, the Authorized Training Provider for GARP, FRM PRM. Some of the financial institutions where we have provided a training, Franklin Templeton, Infrastructure and Project Finance, Credit Risk Management and Quant Analytics, HSBC Risk Management and Quant Analysis, JP Morgan Financial Modeling and Excel, and so on and so forth. Some of the institutes where we have provided the training. Here we are. We're present in North America, South America. We're present in major countries of Europe, Middle East, South, complete Asia, major countries of Asia, Hong Kong, Singapore, Malaysia, Australia, New Zealand, few countries in Africa as well. This is our presence across the globe where we're providing the training. Some of our indicated list of the topics that we cover. We cover leverage buyouts, equity valuation, equity investments, Excel for CPS, CFA, FRM, PRM, APRM, IFRS, financial modeling, private equity research, real estate modeling, portfolio management, so on and so forth. So there's a complete list of the courses that we offer. Thank you very much. And now we would like to invite as many questions as the candidates have. So you can just simply post down your questions. No one-to-one base. Just post down the questions in the chat box.
Does anyone have any other queries? Any questions related to the course?
Crystal clear to everyone.
If no one has any further queries, then we'll end this webinar session. Thank you so much for attending it. We hope to see you soon.